Hello. Happy Tuesday, y'all. I hope you have had another really successful, productive week. I am recording this on the 10th of May. Chances are tomorrow, interest rates, or the Bank of England base rate, is going to go up to 4.5%. Should we be worried by this? I think we are in the era of the last interest rate hikes, if I'm honest with you. I think this is it. Inflation is starting to curb, so do they need to do that much more? Maybe not. So this is where we're going to stay for a while. Does that mean that we're going to then start seeing drops? No, I don't think it does. I think it will stay this way for quite some time. But that's all right. This is our new normal. As they kept saying during the pandemic, oh my gosh, the new normal. Do you remember that? I think this is where we sit. I don't have a crystal ball. I don't know everything for certain, but I would be hedging my bets that this is where we stay. And look, interest rates on lending are really high at the moment, really, really high. Anybody who is out getting lending, it is kind of ridiculous. Sometimes we're even seeing clients be offered 10, 11% on lending products. If a bank thinks that a deal is particularly risky or isn't within their risk appetite, then certainly we are seeing them offer those higher rates, which in all honesty is not good. So in that respect, you do need to be shopping around. You can expect interest rates of somewhere around 8 or 9% at the moment if you're getting lending on commercial. If you're getting lending on mixed use, this could be slightly lower. And residential is slightly lower again, but that's where we are for commercial. Am I worried? Not really. Have we seen changes to the market? Yes, and that's what I want to talk about this evening. Today, whenever you're listening to this, whenever I am in your ears. So has the market dropped? Yes. I can fully say that between now and last year, when I'm starting to look at the market today, as in today, May 2023 versus May 2022, the market has definitely fallen. Am I telling you that anything that should surprise you? I hope not. But we are seeing prices fall, confidence in people buying fall. We're still seeing sellers ask at the top of the market. And to be honest with you, that's fine, because we have got properties to sell for clients. We're still going to offer bring it to market at the top of the price range. But do I think that we're going to be there at the moment? No. Do I think that in 12 months' time we're going to be in the same position? No. Maybe. I'd hazard a guess and say, could we be at the bottom of the market? Is May 2023 the lowest? Ooh. Come back to me in 3 months' time and ask me what I think then. But maybe we're kind of in the doldrums a little bit. Everything seems slower. Lending is harder, but the bigger deals, if you are in that 800, 900,000 pound plus, you're in a really good place right now. So it just really depends on what it is that you are investing in. Do I still think the market's exciting? Yes. Am I still seeing tenants take space? Yes. Am I still seeing lenders lend? Yes. Am I still seeing properties sell? Yes. Am I seeing values where they were last year? No. That is really, really, really vital information. So what are you going to do about it? That is the question to end all questions. So here's what I would advise you to do right now as a result of this podcast is I want you to take a cold, hard look at your property portfolio and think, okay, where am I in terms of what's coming in and how is that going to change over the next 5 years? And I want you to map out every single thing that you forecast to be coming in and going out every month for the next 5 years. That includes all of your management fees. That includes any leasing fees, any reletting fees, any legal fees that you could have coming up, any maintenance costs that you could have coming up with that as well. I want you to map all of that out. Then what I want you to have a look at is all of the income. What have you got coming in over the next 5 years every single month? And when do the leases that you've got in place come to an end? When are they finishing? Or when have you got a rent review? Now, check your rent review clauses. If your rent review's upwards only, or it's capped and collared, as many rent reviews are at the moment, with you having a low point that you can increase your interest rate, the low point that you can increase your rent. So that would probably be a set fee of around, we're seeing some of them at 2%, 3%, and then you have that upper level, which could be 5, 6, 7, 8%. Check your leases, see what it says, or whether you've got your rent increasing in line with RPI. Check that out. Forecast it. What's that going to look like at that rent review? What is that going to look like? And how is that rent going to increase? So then what's coming in on a monthly basis? If you've got an open market rent review, which is the best of the current rent, or the new market rent, whichever is the highest, I would assume that you're going to forecast staying on the current rent because there's not a lot of rent going up right now. If you are in a secondary or tertiary town, so somewhere that's not prime, not as popular, I would be forecasting for those rents to come down and test that at 20%. So if you haven't got an upwards only rent review and say you've got, whatever it is in the market, test what that looks like when your rents come down by 20%. And if you've got a reletting, test what it looks like with the rent coming down by 20% as well. Now, I would also stress test this with the rent that it says on the valuation office agency website. So go check your rateable value on the VOA. They set their rents from the 1st of April 2023. And whilst the measurements on VOA areas are normally out because they do their measurements based on gross internal area rather than the net internal area, take the pound per meter squared. If you measure a meter square, great, just apply that to your own measurements. Or if you do it in pound per square foot, then you divide their pound per meter squared by 10.764 to get the pound per square foot, and then multiply this on your own measurements and have a forecast at where the rent could go and see, test it, do a couple of different scenarios, 20% less than it is currently, 10% less than it is currently, whatever you've got from the comparables of the valuation office agency website. If you're a members club member, email us and we'll give you comparable evidence from CoStar, Adozo, and all of our other industry sources so that you can compare that. And let's see how this is moving going forward. If you have mortgages coming up for renewal, start forecasting that at a 9% interest rate. What does that look like? How much money are you bringing in? How does that look? Because we set the market when we sell. I'll say that again. We set the market when we sell. Right. So whilst you're not selling, you don't actually know how much your property would be worth on the open market. So please don't get flustered if all of a sudden you start thinking, Natasha, my property is about to go down in value. It's not. It doesn't make any difference where your property value is today, as long as you're not trying to sell or remortgage to take more money out of your property. So in essence, get a higher value, right? Because we're not testing the market, we're not testing the open value. We're literally just forecasting now for worst case scenario. That's really, really, really vital. You can estimate how much your building's worth, but again, unless you're selling, it really doesn't matter. What we're doing is we're battening down the hatches and seeing what the worst case scenario is. Now, if you have been planning to sell in this situation and you think, I am not going to get the value out of this building that I want to get out of it, this is again where that cash flow comes in really, really, really handy, because you can have a thing, okay, well, if I don't sell now, at some stage, I want to get X amount of money out of it. And we know that property prices fall and they come back up, and usually they come back up higher than they were at the previous height. And the reason being is inflation will always bring it back there, and the government controls that to make sure that that keeps happening. Prices inevitably do go up. You just have to wait a little bit of time for it. It might be 2 years, it might be 5 years, it might be 10 years, I don't know. But inevitably it will. So start in your cash flow then looking at, when do you recoup the money that gets you to the place where your sales value, where you wanted to get your sales value today. So how long extra do you have to hold that property in order to still be able to recoup everything that you want? And do you desperately need to sell it? Because when a market is in the doldrums, it's probably not the best time to sell, because you're not going to get the best price for it. Now, I will say that there are a lot of property portfolios at the moment selling. You'll see a lot of the bigger property portfolios disposing of stuff. The reason being is that their board will tell them that they have to de-risk in commercial property or residential property or whatever it is that they're selling off and go and invest in something else. They will be disposing of the assets that they already took all of their money back out of, right? So it's not as if they're selling for a loss, even if it looks like they're selling for a lower value. They have just decided, we have reached the end of the cycle and that's it, we're getting rid. Okay. So if you are finding stuff on the market, I'm still finding stuff on the market. So don't think the market is closed. It's not. We're still seeing stuff on the market. But what I want to tell you is, if you're seeing that good stock come to the market, it's not necessarily because everything is in receivership or it's bad stuff. No, it can be just because a portfolio has decided that's not where they want to be anymore, and then they're moving. So also bear that in mind as well. We are seeing a lot of that. Talking of receivership, we are also seeing a lot of that happen as well. So anybody who has remortgaged into those higher interest rates, we have seen some repossessions start to come through the auctions. And speaking of auctions is where everything is happening right now. All the good deals pretty much are going through the auction. So be checking those auctions catalogs day in, day out, because new things are coming up and new exciting things are coming on the market. It is a good time to be over there checking that kind of stuff. Back to the fact that I said, if you're trying to sell at the moment and you're not going to get the money out of it, you need to be checking that cash flow. That is correct. That is the best tip of advice I can be telling you right now. Do you need to sell? Yes or no? If no, hold on. bring in the rental income, reshape that property back into its best possible value. There are still tenants out there taking space. They might be taking space at a little bit less of a rent, but why not put step rents or rent reviews into that lease so that you can build that rent back up? I just had one of my tenants get in contact with me and say, hey, Natasha, we're actually doing really well right now. Can we have a new 5-year lease? I have chanced my arm and asked for step rents over the next 5 years. They could come back and say no, right? But I'm still going to be asking for that, because if I don't ask, I don't get. That's another thing. If you don't ask, you don't get when it comes to negotiations. And you always want to start high so they can negotiate back down low. Don't ever put yourself in a situation where you're like, I should have asked for more. Don't do that. You always want to be negotiating from the best possible position. So ask for more. And if they come in lower, make that decision as to whether you want to accept it or not. So again, I reiterate, if you're keeping hold of your properties, there's still tenants who want to pay rent. There are still opportunities for you to ask for more. There are still opportunities for you to negotiate with these tenants. Everything is possible and everything is on the table. Oh, it just means that we might have had to have changed strategy. And that's okay. Being in property is being a property investor is about the best way of making money. Far too often do I see people say, well, Natasha, I've been told that I should do X, Y, and Z. Right, but what's your backup plan? This is where the backup plan kicks in. If option A doesn't work, we go to option B. If option B doesn't work, we go to option C. That's why we are in property and we're investors. And especially with property, we get to turn it around. We get to think, aha, we can do something different. It is not all a lost cause. We can look at doing this, or we can look at doing that, and we can think, it's all right. I've got this. I haven't lost anything. Or maybe I just have to wait a little bit of extra time to get my money out. Is that the end of the world? No. If you've got an income producing asset, keep that income producing asset going so that you don't sell at a loss. That is my biggest tip of advice right now. The market has changed, right? The market has fallen because of inflation, because of interest rates, because of the economy, right? We know that to be true. So prepare accordingly. We didn't expect it to go this fast. I didn't expect it to go this fast. If you'd have asked me 12 to 18 months ago, did I think the market would be where it is right now? No. I thought we might have been moving in that direction, but I didn't think it was going to happen quite as quickly. But that's all right. We're here. We're alive. We're still doing the do. We are still able to make changes. And that's what I'm expecting of you in this market. And that's why I want you to run your cash flows and have a look at what's coming in, what's going out, all of these scenarios, to really give yourself the best fighting chance of surviving in this environment. Doing cash flows is the most important thing anyway. I do it for my business, I do it for my property portfolio, I do it for my personal income and expenditure. Do it for everything. Plan, forecast, it can change. I have good highlighting rules where I can change things up and think, actually, I'm going to put things in this color because I'm not quite sure that it's going to happen, or I'm going to put things in this other color because I'm not quite sure it's going to happen. But this is where we need to be right now. It is still a market that we're playing in, because if you hold any sort of asset, property asset, you can't just back out and say, yeah, I don't feel like this year. No, don't do that. Play in the market. Be in the market. This is a really good time to test your resilience and think, how good am I going to be at this? The only option is that you come out fighting. So I don't want to see anybody thinking, oh, it's so tough, it's so hard. Reframe that mindset. I had Alyssa on the podcast last week. She talked to us about reframing mindset. If you need another thought process about that, go and listen to last week's podcast. It was freaking awesome, right? But now is the time to not give up. Now is the time to really batten down the hatches. Be prepared for what's coming in and what's going out. Forecast this stuff. And then keep moving forward accordingly. Let your space, agree new lettings, keep that money coming in, work with your landlord, on the landlord and tenant relationship. Make sure that that is strong. That is how you survive in this market. There is no other tip that I need to give you right now apart from that. And more than that, work on being brave. You're going to have to be brave because you're going to have to stick this out. And it's not all doom and gloom. I've told you about the things that are going to happen and things are still moving forward and everything is good. But be brave. Be innovative. Take one step forward, one after another. I'll tell you something I did this week. It's not really property related, but it's a little bit. So I got my ears pierced the first time when I was 13 and I passed out. And I was so embarrassed. And from there on out, I hated needles because I thought every time a needle went in my skin, I was going to pass out. I was going to be embarrassed. I wasn't going to be in control. It was an awful feeling. And that has stuck with me for the last 21 years. That every time a needle goes near me, I'm going to pass out. I'm not going to be in control. And that's never happened again, apart from that one time where I had my ears pierced the first time. But those thoughts, that negative thought has always made having injections, anything to do with that around me, like just the worst possible thought in my head. I cannot stand it. Cannot stand it. It just makes me want to run. When I went in to have Harry, I was not scared about having the C-section, but having the cannula put in my arm was the worst thing that had ever happened. I wanted to run away. Like I couldn't be there. It's like my brain makes me want to pass out. And so I decided that I had to get over that because this is making any medical procedures really tough to go through. And I don't need it being that tough. I really don't need it being that tough. So what did I do? Over the bank holiday weekend, I was like, right, Natasha, let's go prove ourselves wrong. Let's go be brave. So I went and got my second hole pierced in my ear to prove to a point to myself that I don't pass out. Did I pass out? No. Do you know what I did before I went in and got my ears pierced? I told the whole salon how embarrassed I was the last time and what happened. And it just completely took the fear away. So I am encouraging you to be brave in that sort of way. I want you to start thinking about what is your worst case fear? How can you be brave in this market? And communicate it. Communicate it well, right? Communicate it to someone because that is going to start taking away the fear and then start moving forward. That is the most important thing that we can do right now to be able to maintain our property portfolio success and keep moving forward. There was a little anecdote for you. The key takeaway is, number one, go cash flow everything. Make sure that you're in control, forecast the best, worst scenarios. And then just remember to keep being brave, keep talking to people, keep sharing your stories. It's not always roses. It's not. Anybody who tells you that you're not in the right investment market or you've never had anything bad happen to you. In property, you get bad stuff happen to you. You get good stuff happen to you. You get neutral stuff happen to you. You get stuck. You have times where you never hear about a property ever in your portfolio, and then you hear about it all the time. It's all right. It's property. It's normal. That's what we have to play with as property investors. So let's keep moving forward. Yeah, it's not a great market right now, but that's okay. There are still opportunities. Let's seize it. And we're going to be all right. Thank you so much for listening to me this week. I cannot wait to catch up with you all very, very soon.